Hello and welcome to India Market Open. It's bright and sunny on Monday morning and we're gearing up for trade. I don't even think it's going to be about global cues as much as it will be about domestic cues. You know, the bulls and bears have been fighting it out and it seems like we've spent enough time consolidating. A move one way or the other is much needed now.
Yeah, if you look at the small caps, they are saying, hey, come on,
look
at us.
We are
moving. We are doing all fine. But, I mean, I don't know, there's so much on the global side as well.
Yeah.
But from a corporate end, what stood out for me, guys, I don't know what stood out individually for you. But Samsung talking about a 930% uptick in operating profit in Q1. I mean, that was eye-popping.
No exceptional items?
No, I mean, even if they're saying operating profit is 931. So therefore, you leave out the exceptions. It's just crazy what's happening to chip stocks across the world.
So chip stocks across the world, but you know, since you talked about what the story is over the weekend domestically.
Crude?
No.
Geopolitics?
CEOs.
No. CEOs. So, you know, today there's a solar eclipse. And those who believe in astrology think it means a lot. For at least two CEOs, this was quite a tough weekend. So the revolving door for CEOs was activated this weekend for at least Wipro and Bandhan Bank. The Wipro story is interesting and we'll come to more details on that. But the CEO based out of Paris apparently was one of the problems. And what struck me is that for a sector which is pushing to end work from home, perhaps a CEO who loved working from home didn't quite cut it. But yeah, I would think that global cues are largely positive except for crude. Except for crude, of course, but even crude has receded from those 91 levels. So let's take you through what happened over the weekend and on Friday trade, at least in the US. Rebound is what we saw in US stocks. The Dow was up nearly 300 points at the end of trade. And the jobs data that came in very, very hot, much higher than, astonishingly higher than what was expected, was seen at the end of the day. Yes, that means interest rate cut gets pushed further, but maybe the street's okay with it. You're nowhere close to a pain, a recession point in the US economy. That story seems to be over because look at jobs growth at 303,000 versus estimates of 200,000. And that hot jobs data did see bonds also getting pushed up, but there was sort of a steadiness over there. So yeah, the 10-year did jump to 4.4% on the back of hot jobs data. So that trend continues. Bond yields going higher, crude going higher. Crude receded and there was a sell-off of about 2.5% this morning, but it did hit $91 on the barrel for Brent. What's been happening is this whole hit on the Iranian embassy in Damascus. Now there is a fear that there will be retaliation. Israel has shut at least 28 of its embassies in fear of these retaliatory attacks. So that continues to be a sort of iffy situation, but nothing alarming right now. I just want to pull up Asia, and Asian markets opened mixed. So not too much of a hassle there. The Nikkei doing pretty well. The cues are largely positive. Let's look at implied open before I hand it off and see what we are looking like. We're looking like we're going to open about maybe 60 odd points up. Fund flows were also interesting, and I know Samina has more detail on fund flows, but fund flows were also interesting because FIIs ended up buying on Friday after a while, after 4 sessions, and DIIs were the ones which sold around 3,000 odd crores. But what is the big news this week is the question. What is the big factor to look forward to?
Yeah, from a global perspective, I think the CPI data across the world, right? We have US, China, India, so inflation data across the world very likely going to be the key. And from our perspective, starting 12th, of course, but IT commentary likely going to be the biggest thing. So that is thing. Okay, Samina, I mean, do you want to come in on the flows first?
Maybe I should. Yeah. So while, like Tamanna indicated, there was some buying that was seen on Friday. Interesting because this is what we've picked up. FPIs have actually sold, doesn't seem like a very big number, but the fact remains the bets are on the short side. 325 crores of equity in the month of April so far. What you also want to keep in mind, FPI activity looks rather subdued. So if you look at the index long-short ratio, that's actually declined week on week, indicating that FPIs have more short positions on index futures relative to longs. A couple of factors. What's happening is they believe valuations are relatively higher for India. There's your election, general election that continues to be a big trigger. And of course, debt markets in the US and India are providing a better risk reward, is what a lot of the FPI seem to believe. So while you have those equity numbers that look a little subdued, and also quick one, they've actually aggressively sold FMCG stocks and aggressively bought telecom and real estate from the little buying that we've seen from FPIs in this month so far. On the debt side, interestingly, they continue to buy. They've bought debt worth 1,215 crores. This is before India, of course, gets included in the JP Morgan bond index in the month of June. So what you're really seeing is the play is on the long side in the debt market. And of course, across equities, there is a little bit of subdued trade playing out, and the markets are lacking momentum. So, and I think this is what, Niraj, you should come in on. While we are seeing participation, we've done okay last week, right? You had higher crude, weak global cues, discounted the policy. Despite all that, ended up slightly higher. But your open interest is seeing a very clear decline. It was down 11% week on week, which makes us all believe that this is a short covering-led rally. Until FPIs don't come in lock, stock and barrel, if it's short covering, I'm not sure how much momentum is going to be there on the upside from these levels.
Maybe, so relative to the roles, the short covering, interesting. I haven't looked at
in
data
terms
to be
of
very
OI
honest.
and
okay.
price
and
movement.
on the market-wide OI. Okay. Yeah, but you know, the interesting piece is, again, we speaking about flows being subdued. Banks are leading the charge.
I know, they're only 150 points off from 20
from the all-time highs.
And this is despite the policy not really playing out.
But for the week at large, right? So that's
Look
the part
at
of my
business updates part.
Actually, those have been
Look
very
at the
promising.
business updates, fantastic deposit growth. The big issue last quarter, and this is a traditionally stronger quarter, but the issue last quarter seems to have resolved. There is an effort there, an improvement. I mean, you might have one or two off stories there where there's a specific problem like a Bandhan, etc. But the small finance banks, the larger players, HDFC was the star of last week. And you know, just to add to the point that you were making, I think till June 4th, there is going to be a wait and watch on those FPI inflows.
Numbers,
so maybe you will not see too much movement
action
there.
on that side.
So, okay, and that's kind of sums up the piece, and that's why, I mean, we're starting on the trade setup by saying this, that banks are leading the way despite the FI flows, and that is actually a positive, because usually you correlate banks doing well with FI flows looking positive. Thus far, banks have done well, despite the FI flows not being very amazing. And the market breadth last week, by the way, indicates that the momentum is intact, despite muted global cues, right? You saw the small caps and the mid caps participating with gusto. I think that was the key telling point. So banks plus small caps doing positive. You have two ends of the market covered from a portfolio perspective and the headline index perspective, which should be positive. Now, IT commentary, I reckon, for FY25, likely the most important statistic, maybe not for this week alone, because you'll only hear from TCS towards the end of the week, but likely for the next 10 days, you probably look at that statistic as being the key thing from an index perspective, because 10-11% of the weightage gives commentary, and the market will likely react to that. So watch out for that one. And guys, just before we get to individual stocks, I dare say the sector, while there's real estate, telecom has seen buying, small caps have seen buying, look at what's happening to pharmaceuticals. It's crazy what's happening there.
It's a defensive play, interestingly.
It's a defensive play usually, right? But the API companies are seeing buying of another magnitude. Look at this. So API stroke pharma, I've picked 3 or 4 names. Divi's Lab, the highest weekly close since Jan 16, 2024. In Swift Labs, highest ever weekly volumes with some fairly strong price action seen in Friday's session, up 14%. Piramal Pharma, very strong price strength. Signs of momentum, 3% higher back from those small cap lows. And Laurus Labs closed at the highest level YTD at 441 odd on the NSE. So there's some serious price volume activity happening in pharmaceuticals, remains a sector to watch.
Rotational invest buying, I think, is what is currently happening. But lots of stocks. Very quickly, a check on implied Nifty before we take you through all the stocks you want to watch out for. In today's day of trade, implied Nifty is indicating to a higher start. So it's actually a good thing on the get-go this morning. 22,600, remember, is going to be what the street will be eyeing, and 22,300 is an important level of support for the market. So the range or the hurdle would be 22,000 to 550 to 22,600, and that's what market participants will be tracking very closely in trade. It's been a weekend of CEO exits, we've been calling it that. There's Wipro and then there's Bandhan Bank. We'll start with Wipro, and that will be a key stock to watch out for. Wipro's CEO and MD Thierry Delaporte has resigned from Wipro 1 year ahead of his tenure ending. Remember, Wipro has now appointed 30-year veteran Srinivas Pallia as his replacement. Pallia's most recent job at Wipro was heading the America region, which is the fastest growing strategic market for Wipro. Remember, Thierry exit comes in on back of serious underperformance by Wipro as compared to its peers. In fact, Wipro is the only company out of the top 4 IT companies that is expected to close the year with a decline in revenue. In 2023 itself, they also had witnessed about 10 senior level exits. Mr. Delaporte comes from Capgemini and has been instrumental in leading a strategic change at Wipro, but the recent underperformance by the company is probably what is being attributed to his stepping down. Well, a couple of...
Sorry,
you want to come on this one?
No, just a small statistic. I mean, I don't have a view, but here's the deal. Just playing the devil's advocate for the heck of it, okay? But Wipro, since Thierry Delaporte came in from May 2020, right? It's the second best. It's the second best performing IT name. So much as we criticize whatever
on the parameter of stock price.
Yeah, one is going to stock price and then going to fundamentals. So stock price performance, it's done better than Infosys, TCS, as well as Tech Mahindra. So
121% to quantify that gain.
Total 155 actually.
Okay.
From May. No, actually from May. I'm not talking from the day of open. Maybe you're right. Okay.
Yeah.
So from that. So that is one. But two, I also looked at the 4-year CAGR performance. From the time he came in, so let's say April 2020, till TTM, which is December. We don't have the benefit of March as of now. So I've taken trailing 12 months. Wipro sales performance is okay. Yes, the PAT performance is declining. So sales performance, Wipro is 10% 4-year CAGR. Infosys is 14 years. TCS is 11%. So it's not that on the sales number, TCS and Wipro have shown a chalk and cheese performance. No. So that is, again, playing the slight devil's advocate. The only place where I think they've missed out, to be honest, is the PAT performance. 4-year CAGR, TTM, of course. Excuse me for using 4-year CAGR because we are on the 4th year at hand because the last quarter is left. But till trailing 12 months, Wipro PAT is 4% versus TCS being 9 and Infosys being 10. So maybe they miss out a little bit. But sales have been okay.
But are the promoters happy with what
clearly.
the direction
They know the business
that's
better.
going, and then other factors like when you're comparing it, what about the overall pain point for the industry, which everyone suffered.
So it suffers for everybody, right? So I'm saying that
I
just
think
playing
what
the devil's advocate.
added some value to that. He said the problem with Wipro right now is if you're going for the big deals and you're going for quality and price is not a concern, your top bet is TCS and Infosys. If you're going in on cost optimization, lower margins, you're going to go after an LTI Mindtree. It is Wipro that's finding itself hard to either be the top two boys or to work on a cost optimization strategy. And unfortunately, while, like Niraj said, their revenues are up nearly 50% in the last 14 quarters, and this is under the leadership of Delaporte. And remember, he's had an extensive career with Capgemini, where he's been an exceptional outperformer. He's been leading from the front. So, of course, this not working out for him is rather unfortunate. But an internal hire, they've moved Srinivasan. Remember, he's led the American market, which has been very strategic and important to Wipro, or like any other IT company in the last decade, and that is what is the change of guard. Brokerages haven't commented on this per se, nor have they reduced their rating on the counter on back of this. What they have is some low prices on back of just the fact that the business is struggling, and this is going to be the only IT company that is going to see a decline in revenue. But we're talking about CEO exits. Bandhan Bank's Mr. Ghosh is also stepping down. We'll quickly cut across to the Bandhan Bank con call and hear out the rationale or the reasoning behind this move, because this is significant.
Over the last, we have built our commercial and retail asset business and added further production and the capability. Today, the bank has diversified the portfolio across the geography. As you are, the recent past, we have enhanced the bank's leadership with our two executive directors, Ratan Kumar Kesh and Rajinder Kumar Babbar. And one of the CFO joined, which is Rajiv Kumar Mantri, head of the mortgage and retail estate, Mr. Santosh Nair, who are working closely with other senior leaders in the bank. His team is ready to take the bank to the next level. In addition to the team being in place, I am also seeing that business momentum has, with the good assets and liabilities growth and improvement in the portfolio quality. You would have seen our initial disclosure number as of 31st March 24 in this regard. I felt that this is therefore an appropriate time for me to take these opportunities, this call. As we are a full business cycle, April to March, it also gives the board and the selection committee to identify and appoint my successor under the succession plan that the bank has in place. I want to once again assure all of you that the bank is ready to take the next leap of growth with capable leadership. I am assured the board that I will be available for any guidance or advice. On behalf of the board, I can also assure you that we'll ensure a smooth transition.
That's, of course, Chandrasekhar Ghosh, the realm and the head and the founder of Bandhan Bank, who will be retiring soon. Lots of reports about why he is stepping down, but remember his extension in tenure, which was applied to the RBI, had still not come through in terms of approvals. Apart from that, remember, Bandhan Bank has been in focus in the last couple of months. The stock itself hasn't done too badly, so we'll give it that. It's up 19% year to date. But with the founder himself stepping down, there could be some vacuum on the top, and that is going to be, or turning out to be, a concern for Bandhan Bank. This also comes in at the heels of the fact that the bank is being investigated for 23,000 crores of assets. Their NPAs have also risen very sharply from 1.4% in 2020 to 7.2% in the last quarter. So rising NPAs and the fact that their assets are being investigated for lapses or violation, evergreening, and also, more importantly, inflating their book on back of fictitious customers are some of the things that are going on with Bandhan Bank. Jefferies has aggressively downgraded the stock from a buy to a sell, reduced their target price from 290 all the way down to 170. So that's the Bandhan Bank story. The stock is expected to see a negative open in early minutes of trade. Well, a quick one where you might see a positive reaction, and this is Vodafone Idea. As part of their 45,000 crore fundraising plan, the board of Vodafone Idea on Saturday has approved a proposal to raise 2,075 crores from the Aditya Birla Group through their private equity arm. Watch out for this one. In February, remember, Vodafone Idea had indicated that the promoters will participate in this fundraise as committed earlier. So keeping up with that is what we are seeing. They've also comes in at a precursor of the telecom company, remember, raising that humongous sum of money that they're looking to raise. So Vodafone Idea on the positive. Bandhan more than likely to see a gap down. Wipro, for now, I'm on the edge. It's going to go either ways.
Yeah, I think Wipro sentimentally may see some pressure, but let's wait and see, because there is a lot going for the new CEO, and you see the couple of notes from Nomura and Jefferies. They also indicate that there's going to be some pressure. Couple of business updates, which means those stocks could be on your list. Tata Steel Metals have been having a great run. It's a positive set of updates for the financial year and the quarter. They've had their highest ever annual crude steel production in FY24, up 4% year on year at 20.8 metric tons. The Q4 number was also pretty decent, 4.5% year-on-year at 5.38 metric tons. I thought the Titan updates were also interesting. Revenues rose 17% year-on-year. CaratLane has clearly been a good bet for Titan. They've added 10 new stores, but the business itself has gone up about 30% year-on-year, so that's been their big winner. Jewelry has been doing well, 18% year-on-year. Watches and wearables, okay, not that great, 6% year-on-year. The problem really is, as has been for a while in the eye care business, down 1% year-on-year. Standalone, 17% year-on-year, so not bad. I thought Cochin Shipyard, the story was exciting, and you might see a sentimental move more than anything else because there's no big financial angle. But the U.S. Navy has signed a master shipyard agreement with Cochin Shipyard, where they will be repairing U.S. Navy vessels under a military sea lift command. So obviously this is also a pact or an understanding between the two countries, but this was a deal that L&T had previously, now Cochin Shipyard has. I think sentimentally you could see a bump up there.
Just very quickly on Cochin, it's been such a performer. Your defense stocks have been doing well, but Cochin is up 21% in the last 5 days.
It's been a star.
Yeah, so there was a deal between, I think, Hindustan Aeronautics and Cochin Shipyard early last week. The big beneficiary was supposed to be HAL, but the stock reaction was on Cochin Shipyard, which actually went up 12% in 1 day of trade. So, yeah, I think even though there is no financial ramification as such, it's going to be a positive.
Cool. No, it's cool, and
only
it's a big
because
deal.
It's Cochin Shipyard.
I know, it's in the U.S. Navy.
Yeah.
So
significant.
You have passed whatever those stringent QR marks are.
Most certainly.
Yeah.
Just maybe Titan reacts. Maybe Titan reacts a bit negatively as well, because just that for 70 times the growth rate that they've given is lower than the run rate that they've done in the last 5 quarters. So it'll be interesting to see how Titan does this morning. But it'll be interesting to see what Voltas does. Tamanna did this small piece on how hot summers are leading to hot gains, and Voltas is actually living up to it, because look at that. They've achieved the highest ever landmark of selling 2 million ACs in FY24. But leave FY24 out. Volume growth in AC sales in Q4 is 72%. That's a strong number. Brokerages have been constructive here. So Nomura has upgraded Voltas' target price to, they've raised the target price to 1450. They are saying Voltas is the preferred pick in the sector. They expect Voltas to outperform the industry with a 25 and 15% growth in 25 and 26. And they're leading, all of this leads to a 7 to 8% annual EPS increase for Voltas in FY24 to 26. So watch out for Voltas, Nomura's upgrade, plus the fact that they've done what they've done. So Voltas is the first stock. Info Edge is the other one. Naukri billings are up 7% at 6.25 billion, and 99acres billings are up about 26.5. Now the key for this one is that the Naukri billings are so much better than anticipated, because the belief was that IT hirings are soft and therefore Naukri will not do well. It'll have a flat performance. They've done in a 7% uptick, which is why Citi is double upgraded Info Edge to a buy and a target price of 6650. They say their EBITDA for the core business is up 8% relative to estimates, and they are raising the core business multiple as well from 36 to 42 times. Nomura too has maintained the price target. And lastly, guys, there are a clutch of things, by the way. Morgan Stanley on Gail is a phenomenal note. They are saying that they will double EBITDA, or the stock can potentially double by FY26. So, I will talk about that in detail. Phenomenal note. Jefferies on IDFC First Bank initiating coverage, target price of 100, 25% upside. So great. Just ending with a whimper. Nestle. They have approved a royalty hike of 75 basis points to the parent company over 5 years. Royalty will increase from 4.5 to 5.25. Maybe the street takes it negatively, maybe it doesn't. Interesting to watch out for.
Whimper is the right word for everything happening in that entire space as far as the business updates are concerned. Unfortunately, whether it's a Nestle, whether even a Godrej Consumer, broadly speaking, I think the only one which was decent was an Adani Wilmar. So you might see something there, double-digit growth in edible oils in Q4. Signature Global, just one quick stock I'll mention before we move to the editor's cut. Pre-sales in Q4 up 240% at 4140 crores. And this was another sector which was doing well on Friday. So watch out for Signature Global as well. The Q4 collections are also up 72%. and pre-sales up 112% year on year. So these are some that maybe we should look for. But Alex, this morning seems to be all about the CEOs bidding adieu.
Absolutely. In fact, if you are sitting in the corner office, then there's one set of individuals that you need to keep very, very happy, and that is the shareholders. And particularly when there are promoters and not public shareholders, it becomes that much more imperative because you can be gone in a flash. That seems to be the case, at least in one of the entities that we're talking about. I'm sure that my colleague Tushar will confirm. We're talking about Wipro here. On the other end of the spectrum, the founder himself is giving way, Bandhan Bank. We'll talk about why that could potentially be the case and what the implications are for a stock that is already down about 19% in 2023. That's Bandhan. 2024. That's Bandhan Bank, which is down 19%. Harsh is going to talk about that. But let's start with Wipro. It's not been an easy ride for the Frenchman. He's been sitting in France and he's been overseeing a company that has been losing out, particularly on the bottom line. Is that the most important reason why he's exiting?
So, thank you, Alex. So, first of all, let's remember why Thierry Delaporte was brought in. Excuse me. He was brought in for a turnaround. So last year we wrote about it that Wipro's turnaround story may just go for an about turn when the pain points of discretionary spending came in and the changes that Delaporte was bringing were not working out. So essentially that turnaround has now happened. He is now leaving the company. So essentially...
Not in the business perspective.
Not in the business perspective.
Is with him leaving.
With him himself.
Right.
So he was brought in for a turnaround, but he's now done an about turn and he's leaving the company. So what he did, let's take a brief look at it. He made the biggest acquisition in Wipro's history with Capco, which is a consulting UK-based consult company. That's for $1.45 billion. Secondly, he brought in about 2 restructurings, mega restructurings in 3 years. That led to a senior level exodus at the company. 25 senior vice president level exits happened in 3 years. About 200 general managers left the company in the 3 years because of those restructurings. Delaporte set up a growth office targeting long-term deals, large deals. That didn't pan out. Not a single large deal was struck during his tenure.
What's the definition of a large deal?
So essentially something which is more than $1 billion.
Okay.
So something that TCS and Infosys do quite regularly. So if you want to play in that park, you want to crack the $1 billion deals. Wipro had a very strong 2021. That was because of the pandemic led digital transformation that happened, but that didn't percolate later because again the discretionary deals went away. So what are the reasons? First of all, underperformed the peers. Revenue decline happened compared to the peers. Discretionary went away, but it hit Wipro even worse because remember consulting deals are mostly discretionary. So once that goes away, completely the consulting piece falls. So essentially his dream or Wipro's dream of building an Accenture in India, which no Indian IT company has been able to do that, didn't work out. So when you are looking at essentially a revenue decline in FY24, of course you're going to get
Geographically, where are their biggest clients?
So the biggest clients are still based in the US and Europe, but the new clients are not coming in. So essentially the big ones, the big banks, the BFSI clients go to say an Infosys or TCS, the smaller ones go to say the little more mid-tier LTI Mindtree. So the space what Wipro wants to acquire is somewhere in the middle, but it's just lost.
So the criticism of the disconnect between the Indian workforce as well as the clients in the US, with him sitting in France, is relevant?
Exactly. So the point is, you either sit at one place. Right. So for example, Srinivas Palya, he's heading the BFSI practice for Wipro in America.
In the US.
So he's in New Jersey. Most CEOs will either sit in India or will sit in the US. You either are close to your clients or you are close to your employees. So you have to do either of them. You can't sit in Paris because there will certainly be a disconnect between either your employees or with your
So then the
clients.
bottom line then, I think we've fairly established what the issues were. Is there going to be a turnaround finally with Delaporte heading for the exit?
So difficult to say because discretionary deals are not coming back in a hurry. But there is one strong benefit right now for Wipro is that both the CEO that's Srinivas Palya, as well as the CFO, Aparna Iyer, who stepped in after Jatin Dalal left last year, again because of these restructurings. Both are internal candidates.
Okay.
So that gives the confidence to the company and its employees that, okay, we have internal talent now in charge. So remember, Srinivas Palya is the first internal CEO since 2011. Also, he's the 8th CEO since 2002.
Wow. Okay, so that's significant.
So 8 CEOs in 20 years is it's a revolving door, so to say. Right?
Yeah. So fair point. We'll have to see what the implications are for the stock. It has underperformed its peers in a big way. Let's see if there's a bit of a positive reaction on the back of the announcement that an internal candidate is going to take over. But moving from Wipro to Bandhan Bank, because this really is something that came as a bit of a surprise with the board approving his extension, Mr. Ghosh.
Yes.
But then Ghosh coming and saying, look, I am heading for the exit.
Well, yes, Alex, and that's where the overhang is. Mr. Ghosh is the founder CEO at Bandhan Bank. He's always driven strategy all these years, 25 odd years, almost 25 years is where he's driven strategy. And therefore, would this exit change the strategy? Not really sure, but would it pose concerns for investors? Most definitely, because any change in leadership at any bank will pose an overhang of sorts for any banking entity. So that's the first point that we'd like to make. The second point here is it's his retirement of sorts is very close to the last day of office for him, which is 9th of July. So there's very little time basically for Bandhan Bank to appoint someone and for someone to settle in to the bank. Of course, the key question is whether the RBI has or has not approved his
pending.
Reappointment. That is pending, and basis the conference call which is on right now, we've gotten to know that there is no communication from the RBI. So that's the other piece that obviously needs to still get solved for. We're not sure whether the RBI has driven this or whether it's him personally who has driven this. But likely the commentary currently seems to be he's personally driven it. It's for personal reasons, and why such a quick exit of sorts? Why wasn't this pre-planned? What they are seeming to suggest, again on the call, we're listening to it as we speak, is he's suggesting the bank has come to a point where the COVID issues are behind them, even though asset quality issues continue to mar the bank. COVID issues are behind them and growth seems to be coming back. So he is choosing to step down in what he believes to be the best time.
But the numbers don't seem to suggest that that is the case. You look, at the end of the day, management or somebody that is making way, that is heading for the exit, is going to make it sound like everything is fine because they want to keep shareholders, they want to ensure that they're not freaked out, for want of a better word.
Yes.
And I'm pretty sure that you're likely going to see a reaction on the other side of the spectrum with a couple of brokerages already coming and double downgrading the stock.
Correct.
The question mark is this asset quality issue. Is somebody that is going to fill the role of a Ghosh that had as much power to wield mechanisms within the bank?
Correct.
Is that new CEO or head of that organization going to be able to move the needle?
At best questionable, Alex, and hypothesis isn't good enough at this point. What Mr. Ghosh also seems to be suggesting is he's not going anywhere per se. He's just going to step up into a more leadership or a strategic related role at the holding company level, Bandhan Financial Services, which of course does insurance now, mutual fund now. So he's probably going to spearhead that angle of the financial services arm. Hence likely he will continue to wield some amount of influence, if not too much. But markets largely will lose confidence to a certain extent because there is a leadership void very clearly, Alex.
So we'll have to wait for an announcement as to who is going to take charge and what the transition period is going to be. But expect there to be a little bit of turbulence for Bandhan Bank in trade today. Remember, it's a stock that is down as much as 19% in 2024 alone. Let us know what you think about these two stocks. What do you make of the management changes? And meanwhile, we have to slip into a very quick break. There's F&O cues to focus on the other side. So do stay tuned.
Welcome back. You're watching India Market Open. Implied Nifty is indicating to a positive start on the street. But remember, last week of trade was very exciting, with the Nifty actually discounting pretty much all the bad news that we came across. And the broader markets leading the way on the way up. Remember, you had high crude prices, weak global cues, RBI policy, all of that taken in its stride for the Nifty. Bank Nifty has been the star. I'll take you through why and how the F&O activity currently is playing out. That's Bank Nifty. You saw open interest up by about 15% on Bank Nifty futures. The Nifty, on the other hand, saw 1.5% increase in open interest. There you go, down actually now 1.5% lower on the futures on the Nifty 50. Well, let's take you through all the F&O activity that we saw and where was the maximum open interest addition in terms of calls. Maximum or call OI was seen at levels of 23,000, followed by 22,800 and 22,900, indicating that those are going to be key hurdles or resistance for the street. On the puts, on the call writing side, call writing was seen at levels of 22,800, followed by 23,000 and 23,500. Call unwinding, on the other hand, was seen at 22,400, like you can see, followed by 22,300 and 21,500. On the put side, you saw enough and more activity at levels of 22,300, which, remember, will be an important level of support for you. So 22,500, 22,400 and 22,300 will be the key level of support coming in for the Nifty 50. But like we've told you before, Bank Nifty is the star in trade. Saw a very, very sharp rally in terms of Friday's trade, and of course now trades only 140 points lower than its record highs that were made on 28th of December. What you also want to watch out in terms of levels on Bank Nifty is, if I can quickly pull up the put call ratio on Bank Nifty, will give you a sense of where the support and the resistance sits. But for now, you have seen a 15% or 14% increase in open interest on Bank Nifty futures. That's been the market trend. There'll be lots of stocks that you will be tracking in today's day of trade, but we've got with us Shilpa Raut of Prabhudas Lilladher joining in with her top trading strategies. Morning, Shilpa. Thanks for joining in. Last week was interesting. You might argue that with the decline in open interest and the Nifty moving up slightly, it could have been a short covering led rally. 23,000 on the upside is pretty much where the stiff resistance as we see it. Of course, much before that, we have 22,600 to watch. In terms of a strategy, what are you doing with the Nifty right now?
Good morning, everyone, and thank you for having me on this show. Talking about Nifty, we see that, the individual PCR strike price at 22,500 is just below 1 and 22,400 is nearly close to 2. So this range of 22,400 to 22,350 will act as a crucial support. And yes, the resistance definitely lies at 22,500 to 550 zones. But if you look at the move in Bank Nifty is much better placed, we see that, very strong put additions at immediate levels of 48,300 to 48,000 zones have been building up very strongly. Also, the individual strike price for Bank Nifty 48,300 is very high, and 48,500 is also just around 1. So the moment it crosses 1 and sustains around 1.2, you will see a very strong short covering again happening for Bank Nifty, which will lead the index towards 49,000 to 49,500. Also, as per if you look at the FII's data, they are more bullish on index than, rather individual stocks. So today also, I would believe that it will be more of a index trading session than individual stocks.
Shilpa, would you initiate a trade on Bank Nifty? Because like we've said, it's been the star performer. It's only 150 off from its record highs that were made on 28 December. At these levels, if we get a flat to slightly higher start on Bank Nifty, longs on the cards for intraday or maybe for the week?
I would actually be a little cautious here until and unless, we decisively cross that, the previous all-time high and sustain above that. Once it does that, then, a trade opens up towards 49,500. So in that regards, 49,000 call for the next week or 49,500 call also, for the series end can be played out. But for me, I will little, hold myself back until the previous all-time high is not, breached decisively. I'll not initiate a fresh trade for Bank Nifty. But I would, in this regard, because that Bank Nifty is very, very strong and Nifty also is, hinting on very limited downside, I would initiate a trade in Nifty probably for the day or, this weekly expiry at around 22,600 call. One can definitely buy on declines till, maybe 65. It is trading at around 89, I guess, right now. On declines towards 65, you can keep a target of 100 and 125 with a stop loss of 45 then.
Shilpa, Tata Chemicals, I believe, is on your buy list. The stock made a very sharp up move on Friday. How does that one look? What's the strategy on Tata Chem?
Actually, the entire chemical basket is looking very strong, and Tata Chemical, after a very long, halt, has been performing now. The stock has closed above 1100, which is a very positive sign for this script. So this future on declines to 1125, one should buy. Keep a stop loss just at 1100 or just below that will be fine as well. But I look for targets of 1170. The other one would be a sell in Asian Paints. Asian Paint is not, crossing decisively 2950. It is not sustaining above that. So as long as it is actually trading below 2900, it is a little weak. So that would be the stop loss. 2910 in futures would be a stop loss, and look for targets to 2840 to 2825.
Thank you, Shilpa. So it's a long trade coming on Tata Chemicals on the Nifty, avoiding Bank Nifty for now, even though it's made a sharp up move, and a sell call on Asian Paints from Shilpa. Thank you, Shilpa, for joining us this morning. I'm quickly going to toss it back to Tamanna. Niraj, I believe we've got Wipro back in focus.
Yeah, Wipro absolutely back in focus, and that is in a sense the story of the morning because of several factors, also the kind of expectations which the new chief is going to face. To break it down for us, I'm joined now by Moshe Khatri, Managing Director of Equity Research at Wedbush Securities. Moshe, very good morning to you from where we're sitting. Thank you so much for speaking with us. Were you surprised to hear of Delaporte's exit? Because a lot of people who watch the space and watch the company, their first response was, oh, this was in the offing. And is it maybe in a sense ushering in a new, a new phase for Wipro?
Definitely not surprised. I would say it was always about when and not if, especially given the fact that the company has underperformed relative to peers. We've seen some executive defections recently, so I think it was just a matter of time that actually happened. So the response to your question is no, and it was actually in the making for some time, in our view.
In terms of impact for Wipro, would you see it as a positive with Mr. Palia coming in? He's the insider, he's risen to the ranks. Would you see that as the change of guard also maybe changing the direction of the company?
Wipro had a couple of those what we call false starts with new CEOs, and these really haven't worked out. I would say that typically change starts at the top. So it's probably, this is a positive development. The question is more about what the new CEO wants to do. I would say that Wipro has the foundation to compete very effectively with their peers, especially more on the engineering part of the business. They've had that for some time. They've just never been able to kind of capitalize on this growing trend for product development and R&D outsourcing. They also have a very unique asset called Capco. This is an acquisition that the company's done 4 or 5 years ago or so from a company called FIS, which actually does consulting catering to the financial services vertical. It's a unique asset that I think there is a way to monetize. So there are a lot of things that can be done with the right leadership. And I'm assuming that this is one of those things that we'll be focusing on as we speak.
In immediate sense, Moshe, do you think that, because we will see Indian markets respond in just a bit from now, do you think that the first response would be seen as a negative because of the kind of changes that Wipro has had? So not really a steady kind of a phase as far as leadership is concerned, or will it be seen as a positive? Because if this CEO was not working out, at least a change has been made.
I think this will be a show me story, given the track record and given the history.
Right.
And somebody asked me this weekend, well, do you think that the timing means that, hey, they're doing this right before the earnings come out, and doesn't mean that the earnings are going to be a bust? So there are all kind of different theories here in terms of timing and why is it happening. And, change is disruption. And in Wipro's case, I think it could help change things internally and change things in terms of how the company positions itself outside in the market. But I would say that the market will see this more as a show me story until we actually start seeing those results, given the fact that we've had multiple CEO changes in the past, 10, 12 years that haven't really triggered any sort of positive changes.
Moshe, very lastly, from the top four, Wipro is probably the only one that's going to see a revenue decline to close the year. Their margins are at the lowest of 16%. Do you feel like the main job for the new CEO will be to hunt for projects that do not erode margins further and actually go for those projects which are margin accretive? Now, all this sounds great if the macros are supportive, which currently aren't. In that situation, what does the man need to do to win shareholders?
I think this is actually a pivotal time for the industry. Repositioning to focus on AI. In Wipro's case, repositioning to focus on the faster growing areas in the industry, such as product development, R&D outsourcing. And they have, as I said, they have the infrastructure and the skills to do that. It's actually not a bad time to have new leadership on board, especially given the macro and given where we are in this industry, to be able to kind of capitalize on those trends. So, and if you're able to do that, you should be able to scale and probably do better on margins. Absolutely.
Very lastly, we're going to go into earnings season next week. Just ahead of that, are the top 4-5 IT companies in pecking order? What are your top 3 bets?
We believe that at this point, TCS and HCL Tech, we don't cover them officially, but it seems that they're well positioned to show better sequential growth. And on top of that, they'll probably end up showing better numbers for fiscal 25. And then, if you look at this, Infi will probably guide, for the way we see it, somewhere in the 2 to 4% range for fiscal 25. Wipro, the way we see it, will probably guide for end up probably growing somewhere in that maybe 0, maybe 1% kind of range for fiscal 25.
Okay, Moshe, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time this morning. So do watch out for tech stocks, and Wipro in particular in this session. But tech commentary starting Friday remains the key thing to watch out for. Speaking of tech, technicals and derivatives, let's get in Sudeep Shah, Head of Tech and Derivative Research at SBI Cap Securities, for his quick thoughts on the markets and specific stocks as well. Sudeep, good having you. Thanks for joining in. Will we continue the rally this morning? What would be an index trading strategy be, either on the Nifty or the Bank Nifty?
Good morning, Niraj. Absolutely. So the markets in the last week has been positive. We have seen good individual stock-specific action also in a lot of sectors now, real estate or metals. They have shown good traction on the upside. But coming to the Nifty and Bank Nifty levels, I feel Bank Nifty is outperforming Nifty. So on a Bank Nifty trade perspective, I feel overall 48,150, 48,200 will now hold out as an important support until the time indices, Bank Nifty specifically holds 48,200. On the upside, 48,800, 48,900 could be likely by tomorrow second half. So overall, I have a buy call on Bank Nifty. And Bank Nifty could be bought with a stop loss of 48,200 spot levels, and on the upside it can see levels of 48,900. From the Nifty perspective, 22,350, 22,380 will act as a strong support. Decent put writing has happened in 22,400 and 22,500 strikes. So overall 22,350 zone could act as a strong support. And on the upside, the first level to watch out for would be 22,680. And crossing which 22,790, 22,800 could be witnessed in the next few sessions.
Okay. And Sudeep, with that in view, what are the specific stocks that you're recommending in the session today?
Yeah, so the first stock is Brokerage Properties. In the last week, we have seen good stock-specific momentum in real estate space, and almost all the stocks have seen good momentum. But out of all these, from a relative strength perspective, I feel Brokerage Properties tops the list. And if you see the charts also, since last 8 to 10 days, it's in a structural uptrend. Now it's almost close to its previous highs around 2,500, 2,520. But the strong bullish candle on Friday gives me enough confidence to say that the previous resistances also would be taken out. So Brokerage Properties can be bought with a stop loss of 2,450 on the downside, and 2,600, 2,620 could be the potential targets on the upside. The second stock is ICICI Lombard. Now, this stock, after a while, has shown good traction, and it has broken out of its consolidation range. Now, this consolidation range was for the entire month of March between 1600 and 1690, 1700 on the upside. And Friday's closing with a strong candle was backed by volumes and a rise in open interest. So I feel ICICI Lombard can be bought with a 1670 stop loss and 1790 as well as 1820 target on the upside.
Okay, so watch out for those two stocks as well. It's interesting Godrej Properties comes up in the list of things simply because real estate stocks actually had a really good week, the last one. What is interesting is that we're not seeing too much on the pharma side as yet from this thing. So Godrej Properties is the first one on his radar. Let's also, that's the target price, viewers, keep in mind. Let's also get the second stock up, and that is ICICI Lombard. Like I said, what's interesting that a pharma stock doesn't come in, but we'll talk about that with Sudeep a bit later on in the show. Let's get in Mahima to talk about what are the stocks that one should keep in mind on the back of Q4 updates. Mahima, good morning.
Good morning, Niraj. So the first one is Godrej Consumer. Well, they've recently come up with their business update, and they've said that the operating conditions in India have remained a bit subdued. However, they've managed to deliver volume growth of high single digit. Now, in terms of EBITDA, including the forex margin, continues to expand YOY. They expect sales growth in mid-single digit growth, and this is largely driven by the currency volatility. Now, their underlying volume growth is expected to be a double-digit one, and the consolidated underlying volume growth in high single digits. Now, in terms of their international business, Indonesia business has been doing well. It will deliver a double-digit growth in terms of volumes, and the Africa, USA, and Middle East will deliver a high single-digit volume growth. Now, next, there's a metal company which came up with a business update, Shah Metallics, where in terms of their Q4 update, the sponge iron sales were down around 7% QOQ. The steel billet sales was up around 71%, and long steel sales was up around 12% QOQ, and the overall steel sales was at 6.87 lakh tons, which was up around 6.5% quarter on quarter. So these are the two companies that will be on the radar on the back of Q4 business updates.
All right, so quite a list over there, and talking about some of those names as far as business updates are concerned from the consumables segment. Godrej Consumer, Marico had relatively decent numbers. We talked about Adani, Wilmar. Sudeep, any of those that you're tracking and you like on the charts?
See, if you see the charts of Marico as well as Godrej Consumer Products, now Marico also on Friday's session has seen a good volume-based buying, and it has broken out of its consolidation zone. So I feel Marico, once it crosses above 520, could be in good action from a positional perspective. And speaking about Godrej CP, that stock has been in a range now for a good period of 2.5 months. Now, it is starting February. If you see, the stock has been at 100, and it was around 1180, and right now also it's around the same price. So not much action has been seen in this stock, but it is still from a medium-term perspective, the stock is in good shape right now. But I feel all these FMCG counters, even looking at the FMCG index also, it's on a declining trend, and the momentum there is lacking. So overall, I feel all these stocks still are in a consolidation phase and not in a breakout zone like all these other sectors such as metals and real estate spaces in.
Right. Sudeep, very quickly, a word on Voltas while we're at it. The stock has done exceptionally well, and of course, now those numbers are looking eye-popping. On Voltas, a quick trade.
If you see the charts of Voltas, it has broken out above 1130, 1140 in the last week from its consolidation zone, and from there there has been no looking back. And the structure that the stock is exhibiting on the weekly as well as the monthly charts shows that the momentum still will be there. Although on the daily chart it's on a overbought zone, but post some consolidation, I feel the stock is good to go for 1300, 1330 on the upside. And levels around 1190, 1200 will act as a strong support on the downside from here on.
Okay, watch out for Voltas. Nomura has upped the target price to 1450. So keep an eye out for these. We'll talk about some of the other key brokerage nodes because while Nomura has gone ahead on Voltas, there is Gail, there is IDFC First and a few others which you should have on your radar. We'll take a break. We'll be right back with some of those as well as the pre-open session.
Welcome back. You're watching India Market Open. It looks like it's going to be a good start for the street, but remember, it's going to be Bank Nifty that's going to help the markets higher in today's day of trade, about 140 points away from its record highs that were made on 28th December. While that's the market benchmark, there'll be lots of stocks that the markets will be reacting to. This morning, it's Morgan Stanley that's maintained an overweight on Gail, but with a very aggressive price target and outlook. We've got Mika standing by with more on that. Mika, Morgan Stanley seems very excited about Gail.
Yes, they've set a target price of 254, which offers a 33% upside to the last close. Now, they expect Gail's market cap to double by 2026, given its critical involvement in the gas segment of the energy mix. They expect gas to double in India's primary energy mix from 6 to 12% by 2030, and Gail will benefit as it carries 70% of India's gas. Now, monetizations offers assets, which is investments in private companies, as well as the chemical upcycle to help double its EBITDA by 2027. Now, the company has invested $7 billion in the past decade to expand its pipeline, $1 billion in chemicals, and this will help the EBITDA to double. And also, they expect a 13% earnings CAGR in the next 3 months. Now, Gail is capitalizing on the $10 billion investments, and Morgan Stanley thinks there are multiple underappreciated areas like gas transmission, pipeline tariffs, which will help surge the stock. So, a mix of EBITDA shifting to a higher multiple, transmission and the petchem business is doing better, and the volume growth are the key to the re-rating.
Okay. In some sense, Mika, they also talk about the possibility of the EBITDA doubling by FY27 as well, right?
Yes, they do.
Okay, great. Mika, thanks for putting that into perspective. Now, viewers, the two things out here on this note, and we'll get in Deven Choksi because he tracks this space very closely in moments from now on the fundamentals. But here's the deal. What Gail is saying, okay, these are the pre-open rates starting off, and of course, we'll talk about them as well. Let the rates settle down for a bit, but just marking about 1/3% and sure this could happen. But coming back to Gail, and let's get those Gail graphics on. What Morgan Stanley is saying is that the EBITDA of the business could double by FY27, and the stock, they say, while their target price currently is 253, the stock, they say, could double by 2026. That is, so market cap can double by 26, EBITDA can double by FY27. Typically, stocks discount 6 months to 9 months in advance. So not surprised. Not surprised that they are saying the market could double, because their estimate is that the EBITDA could double in 2-3 years as well. Sudeep, Gail has had a few false starts. There was recent brokerage upgrade which brought the stock up 3%, and then it corrected a bit as well. Is there traction here, or is it not a good trade?
Niraj, if you see the charts of Gail since October, November 2023, the stock has been in a structural uptrend now. From 125, 130 levels, it has gone all the way to 190, 195 levels in early March. Post that, it has seen some bit of consolidation. But the last 4-5 days of trading action, if you see, the stock has once again sustained above its short-term moving averages. And also from an open interest perspective in futures, there has been an addition on the long side. So I feel overall the stock is in a sweet spot right now. These brokerage notes also are supporting that. And I feel in the next few sessions, the stock till it holds above 182, 181 levels, could head up to 205, 207 levels. So this is a positional view, not from a couple of days perspective, but I feel overall the stock is in a bullish trajectory.
Okay. So that's Gail. It's not quite starting off or setting the stage on fire right now, but seems to be an interesting one. So do keep a keen eye out on Gail in the session today. Just the nature of the quantum of news flow, guys, today. Aside of the brokerage notes, and Harsh will talk about IDFC and all of that also. But just the news flow around the consumer names. We have Marico, yes, but GCPL, Titan, all right, and then the NBFC updates.
Yeah.
Just saw that Muthoot Microfinance, 32% uptick.
Yeah.
It's crazy what's happening to financials this quarter, really.
I don't know where all this money is going, though. I mean, is the real economy really doing as well? That's something that we should...
Well, a couple of ways to look at it. Maybe that if there is a bigger requirement for loans, that's telling you that savings are depleting, and
I guess everyone's borrowing money and investing it into the equity markets for all you know.
At higher rates as well, and no real sign of rates coming down. I was just going to say the other one interesting to watch out for maybe is an FSN today. A Nykaa I would keep on my radar. Pretty okay kind of business updates, but no real positive surprises. Doing decently. Pre-open as well, about 2.5-3%. Deven Choksi is with us, Managing Director at DR Choksi Investment Managers. Deven, a very good morning to you. Great to have you on NDTV Profit as always. Let's start with your outlook on the, I would say, stocks of the morning in terms of news. And what they have in common is departing chiefs. Bandhan Bank on the one hand and Wipro on the other. How do you look at these two?
Yeah, good morning, Tamanna. Well, I think it's very natural for Wipro to basically give an entry to the person, I think, who has been in the company for more than 3 decades, as against the expert, the manager who had come in. The whole challenge out here is that I think earlier in case of Infosys also we saw that one has operated from the remote location, from the global location. Probably, I think the connectivity with the local team remained missing. I think in case of Wipro, the repeat of the same thing happening, like what it happened for Infosys in past, where I think they probably, failed to connect the right kind of people within the organization. And as a result of which, some of the major top level people left Wipro. And as a consequence, probably, I think the company is still struggling, even last 5-7 years now. The company is struggling in building the businesses. So I think once again, the company's management going back into the promoters, going back into searching the talent from within the local ranks, is making more sense. Hopefully, I think that should work out well. As such, I think the industry scenario remains quite competitive, and one will have to catch up significantly for the lost ground that one has seen in this case at this point of time. I would look at this particular change which has happened with a sort of optimism that the things could turn around relatively better for Wipro than what probably one did not see in the earlier past.
Deven, hi, it's Samina as well joining in. What is the play in banks right now? We've seen some of those business updates and they're impressive to say the least. And very clearly the bias still remains on the PSU side. Just before we go into fourth quarter earnings, how would you place your bets amongst banks? or NBFCs as well?
Yes, Samina, good morning. Well, I think it's on one side, the consumer credit is taking off and taking off big time. If you look at corporate banks, if you look at NBFCs, if you look at even the small finance bank, you find that the consumer credit is on rise, and that's a very good sign because on one side the economy is growing, consumption space is growing, and at the same time the consumers' demand for the credit is also growing simultaneously. In case of Bajaj Finance, we saw the numbers validating. Similarly, I think we are seeing in many of the small bank case, I think we are also seeing these numbers getting validated. So overall, we believe that I think this trend is likely to continue and continue for a long time to come, not for 1 or 2 quarters. Only challenge which some of the smaller NBFC would have particularly would be to have the deposit attracted as a competitive rate. Likes of Bajaj Finance, they'll be better off largely because of the size now that they have more than 3,30,000 crore AUM size that they have and growing constantly at around 30% plus rate of growth. So every 3 years, the balance sheet size is getting doubled for them. Bajaj Finance kind of company is much better in attracting the competitive rate as far as deposit is concerned. But rest of the places, I think that challenge, that stress might be there. So this is one area where one will have to be a little bit more careful. Maybe the second half of the financial year, when we see the rate of interest coming down, at that time, I think it would be a real challenge for many of these smaller companies, smaller NBFCs, where they would probably, I think, have a challenge in form of, I think, getting their rates competitive in their books, because they will have to look around for, I think, higher price deposits. So that is where probably, I think, they will have squeeze in the margin. But as of now, I believe that I think the business is growing and growing very smartly. So the bigger the size, I think bigger the opportunity. Bajaj Finance, ICICI Bank kind of books, I think they remain relatively more strong as far as I think the consumer lending is concerned.
Okay, so Bajaj Finance, ICICI Bank essentially focus on the larger financial names is what Deven Choksi is recommending. Okay, now we've spoken about, and I want to get Deven Choksi's view on Gail, but because it's a big brokerage note, but there are some very good brokerage notes, and Harsh, as usual, marks out some key ones every morning at around this time. Couple of minutes late to you, Harsh, this morning. Good morning. But what are the key brokerage notes?
Well, good morning, Niraj. First off, we have Citi on Info Edge. We also have a Nomura note on Info Edge, but the Citi one takes relevance because it's a double upgrade. 6650 is the target price on this one that Citi has put. Now, with regard to what Citi is indicating, or rather as the big turnaround, is recruitment business billings. That one has risen 7% year over year. This was expected to be flat on a year-on-year basis, and Citi therefore believes that this business has now turned a corner, and the pickup there will lead to an 8% EBITDA both on FY25 and 26 on a CAGR basis. So you'll see, and they've revised their estimates to that effect. They therefore believe that the recruitment business has likely bottomed out. That's a key positive. Also, Zomato, they've hiked the target price there last week, and therefore they are factoring that into the SOTP valuation as well. Hence the double upgrade and hence the target price. They've revised their multiples on this one. So a couple of levers where they're seeing positives with regard to Info Edge. Quickly moving on, Jefferies has initiated coverage on IDFC First Bank. What they are again suggesting here, target price 100, 26% odd upside, so very solid upside from here. They are expecting IDFC to turn things around in terms of profitability over the next 2 to 3 years. They are expecting credit costs to start to inch up, but they still believe there are multiple levers for IDFC First to focus on, and they believe that a 28% CAGR on deposits will push and allow and enable the bank to grow at 22% CAGR on the loans front. That they believe will aid the bank in terms of earnings trajectory starting second half FY25 itself, and that will drive valuations as well. They've put the target price at 100 on the basis of a 1.6 times price to book value FY20, or rather June 2026 expected.
Okay. Well, speaking of financials and large financials, IDFC may not be large, but clearly finding favor. Harsh, thanks for putting that into perspective. And then Info Edge, quite contrary. Actually, since the pre-open rates have settled very quickly, just want to mark the 2 or 3 key names. Info Edge, one of the key names, and we'll talk about that, 2.7% higher. But Wipro and Bandhan Bank should come up on your screen just to mark what the pre-open session is suggesting. Wipro, 1%, nothing too dramatic. Bandhan Bank down 6% on expected lines. So, that some things just the announcement explains what the move could be. And the Voltas is the last one. Just want to mark what Voltas could be doing this morning because there's a big upgrade. 6% higher for Voltas. Clearly one of the key standout stocks for the morning. Deven, did you have a chance to look at the monthly numbers and the quarterly numbers from Voltas? Their summer sales looking so strong. And that was one of the brokerage notes that we discussed before. So just coming to you on some of those brokerage notes. Nomura and Voltas being constructive, the monthly sales and the quarterly sales looking strong. Is Voltas a buy?
This quarter, Niraj particularly, remains absolutely very strong and convincing for most of the white goods industry players. Largely because of the fact 2 things are happening simultaneously. One, of course, that the discretionary spending of the consumer is growing because of the larger size of the wallet that he is having now. But more importantly, in this particular month, the summer has actually entered a little early, and it is becoming a severe summer right now in most of the parts of the country. So obviously, the likes of air conditioning, refrigerators, coolers, are among those products I think which are likely to find a major amount of uptake in this particular period. And generally seen that April to June quarter, or even for that matter, half of July to September quarter, for white goods, I think this particular period is really very, very busy period, active period. Not too sure about, I think, the volume growth at this point of time as to whether they will have sustainability on month-on-month basis. But obviously believe that I think this is probably the best time that they are having. Valuation-wise, I would not say they are cheap. I think they are all adequately priced. They're factoring actually, I think, whatever the developments which are happening around in the industry is already getting factored into the price. So not completely convinced whether I would buy fresh unless I think I'm buying for momentum. That's a different issue. But for investment purpose, if I have to buy, probably I think I have to buy at a corrected price. Momentum players will definitely make money if they enter into it because of the momentum remaining very, very strong for next 3-4 months.
Stay with us, Deven, Sudeep. We'll quickly go across to market open very shortly. But in pre-open trade, the 2 stocks, or rather that 1 stock that's staring at us in the face is Bandhan Bank, 6.5% lower. From the look of it, shareholders are not going to like the founder having to step down, and this is going to be viewed as a positive, is what we'd expected. There was also a downgrade by Jefferies all the way down from a buy to a sell. 290 to 170 is what the target price has been lowered to. In pre-open, or in open, we're expecting a cut of about 6.5%. While we're at it and talking about CEO exits, take a look at Wipro too. Wipro, on the other hand, is looking up. Guess Delaporte's exit is being viewed positively for now, at least 1% higher on the stock. But I think the stock of the morning upside, Niraj, I would imagine would be Voltas. 6.5% higher is also that one. And Vodafone Idea, 4.5% on those, on 10%, 5% of commitment coming in from the promoters in terms of fundraising.
And it was announced,
committed to. Yeah.
But it's actually money coming in. And
2,000 crores, Tamanna, versus 45,000 crores. I'm just like, can't even do the math.
But either way, Vodafone is now maybe being seen as a player which is trying to get a lease of life in. So they're doing okay in today's trade, not too bad. I just want to see what Muthoot Microfinance is doing, because this whole small finance bank and banking story on terms of business updates is a robust one, and you're seeing a 5% uptick there. Deven, actually, we have no time. I'm going to go across to Niraj for what we're going to see. Just about 18 seconds for those opening rates.
Yeah, we'll probably take in Sudeep's top call, maybe post-market open as well. But suffice to say, a lot of stock reactions anticipated. More that Samina and Tamanna will be able to mark. But on the index, we'll probably watch out for Titan, something that we haven't quite discussed this morning, but we'll talk about it post-market open again. And of course, watch out for some of those banking names as well, and Wipro in particular. So about 0.25% in the green. No big shakes, but in the green nevertheless. Wonder if Banks are flattish. IT should come up on your screen, and then wonder if mid caps and small caps are outperforming yet again. Last week was all about what's happening to banks and the mid cap and the small cap indices. Mid caps up 0.5%, but the small caps on the 1/3 of a percent uptick for the Sensex, 0.77% higher. Clearly, the story is at the broader end of the spectrum. There's a lot of scare. I think that scare has been bought into very, very strongly. Get the heat map up on the Nifty at least. See if any big losers. And no, we're not quite seeing too many losers. Nestle, the royalty uptick is just about 0.25% damage. Bharti, Apollo, ICICI Bank, hardly anything. The gainers, Tata Steel, I think the metals piece plus the update that have come in propels it to the best stock. Titan, despite the fact that the run rate is slower than the last 5 quarters, maybe that 18% mark is something that people don't anticipate too many companies of that size to do. Maybe that's why a bit of a reward there. BPCL up 1.25%. Axis Bank up about 1%. Shriram Finance marginally higher. Metals per se, like I said, JSW, Hindalco, Tata Steel, all of them in the green. So I think it's got to do also with the metals story out there. Not quite seeing Wipro amongst the top 20 movers. So it's somewhere in the last few. So that's the key right here. Wipro, it's quickly sunk lower as well. So maybe the pre-open session was up about 1%. Currently about 0.25% lower. Actually, the stories on the index, Tamanna, is not about the newsmakers, maybe for an exception of Tata Steel and Titan, but it's more of what happened last week. Banks, metals doing well.
Yeah, Tata Steel, remember, also had its highest ever annual crude steel output, and Titan, as we spoke about, the numbers, the business update numbers were decent with the new stores opening, Carrot Lane, jewelry, all of that doing well. But we'll go into those details. Let's just take a look at what's happening with the specific, I think, newsmakers of this morning. Bandhan Bank, we have to talk about. There was a long con call, which happened just a bit earlier, and CS Ghosh is stepping down. No clarity on who's coming next, no clarity on why. That bank has been an underperformer relatively, but is CS Ghosh stepping down going to help? We don't know. And very quickly, you're seeing the pain deepen there, about 8.5% down now as we speak, and perhaps more to follow. So that's one stock to keep an eye on. Cochin Shipyard is the other one. We just want to pull up quickly and see what's happening there. It was a good, I think, sentimental or prestigious boost. The US Navy will be getting Cochin Shipyard to repair its ships. It's a master agreement, about 3.5% up on that stock. Signature Global caught my eye because of business updates, which were quite positive, about 3.5% up there, 240% up on year-on-year sales. Voltas, as Niraj has also been saying, phenomenal numbers, and with the heat coming in, that's going to be helpful for a player like Voltas, something that we have been talking about on the show as well. Good upgrades from brokerages. So Voltas, another. So if you counter 8% down on a Bandhan, 8% up on a Voltas. These are two of the, extreme ends of what you're seeing with stocks. Info Edge is the other one, double upgrade by Citi. 5% up on that stock. Good numbers as well in terms of business updates, helping Gail, again, an overweight from Morgan Stanley. And a target price with a 33% upside. Not too much of movement on Gail this morning, though. Barely 1% up. Just FSN is the last one that I wanted to pull up. Nykaa updates, not half bad. So that sell rating from Citi is not harming it this morning, at least 3% up. And the BPC segment, which is their strongest core, is doing decently as well. So a good morning, I would say, Samina, in especially some select names.
Yeah, Tamanna, it's actually interesting. If you look at Cochin Shipyard, no financial ramification. The stock moves up 5%. That just goes to show you the kind of euphoria we are seeing across the broader market universe. Taking a cue from Voltas, you have Blue Star. That's also seeing good traction in early trade this morning. So AC manufacturers clearly having a pleasant day in the sun. 3% higher on Blue Star is what we have. We talked about business updates, and Adani Wilmar did stand out with their updates. Markets seem pleased with what they've seen. The counter is up 3% in trade. Well, anything with the capital market has been in focus. So you had IIFL Finance do exceptionally well in terms of Friday's trade. The stock was up 13%. This morning, morning, another 1% being added to IIFL Finance, but with that goes up Nuvama and Anand Rathi. Both those counters are seeing a little bit of an up move in trade, with Nuvama up 2%, Anand Rathi also seeing a gain of 5.5 to 6%. So that whole bunch of stocks are gaining in trade. Railway stocks are back in focus. This is election play. IRFC, Rail Vikas, Jupiter Wagon, Rail Tel are all trading with pretty decent gains in morning trade. Tejas Networks is having a good day, up 5%. HPL Power System is up 4%. Aster DM is also turning out to be one of your top movers in today's trade, today's day of trade, after, of course, Voltas up 10% on Aster DM. Info Edge looking good. Vodafone Ideas fundraise. And of course, the promoters bringing in 2,000 crores is helping Indus Tower quite well in trade. Indus Tower is seeing an up move as we see it, is up about 4% in the session. Along with that, Godrej Consumers is up 4%. Phoenix Mills, Thermax, Blue Star, like I said. Adani Group companies, so it's not just Adani Wilmar, but Adani Green as well, is moving with a gain of nearly 3% as we see it. So real estate, Adani companies, railway stocks, capital market players are some of the top movers. Pharmaceutical names as well, seeing an up move. Archean Chemical from the specialty chemical space, this has been an outlier in the last couple of months at least, up about 1.5%. No runaway rally there, but definitely worth the mention. On the sell side, it is Bandhan Bank and Adani Ports that are seeing some weakness. PNB Housing, some of the smaller banks that were gaining last week are seeing some profits off the table, guys.
Can't take my eyes off Info Edge too, by the way. 5.5% up for that one is very solid. But Sudeep, opening thoughts. We couldn't take in your top call pre-market open, but what has stood out for you on open? A lot of stocks are moving around as well. Sudeep, you're on mute.
Yeah, Niraj. So post-opening, what we are seeing is strong action is there in Info Edge, Indus Towers, Godrej, CP. So I think overall, within all these names, Info Edge, I feel, is the best place because the structure here on the daily, weekly, and monthly chart timeframes are very strong. And we have seen this 5-day consolidation getting broken with this big volume-based candle right at the morning in the first 5 minutes now. So overall, I feel Info Edge looks good to go up to 6150, 6200. And if someone is holding this, can continue holding this with 5930 as a stop loss on the downside.
Okay. So Info Edge, not surprising, they're 6.5%. I wonder if this is a precursor to positive IT commentary for Naukri billings to be up the way they have, because everybody anticipated to be flat because IT is supposedly not hiring. But clearly, Info Edge numbers show that. Deven, we have spoken about Wipro, yes, but just wonder if, what's the view on Info Edge per se, fundamentally, and does it give a precursor into what IT stocks might be doing in terms of hiring?
Yeah, I would take the second one first. I think, indeed, I think when we spoke to some of the IT majors, they have said that I think they have been hiring. And they said that I think this is probably, I think, relatively looking better and promising year, 2024, compared to 2022-23. So from a perspective of, I think, seeing the growth, most of the IT companies, the majors, are basically talking about having a team on the campus, vis-a-vis, I think, working from home. To a greater extent, I think that move is already happening. In my viewpoint, I think we have to look at the stability of the business. The order inflow has started coming in, and many of these IT companies are getting reasonably big size orders also. So they may not be probably, I think, looking as many as they were probably analysts would have expected. But still, I think the volume wise, I think the orders are big, and they are giving visibility of 5 to 7 years in many cases. So we would remain relatively more positive on the possibilities of IT companies cornering the better business than before compared to last year. How much growth, etc., I think we'll have to wait and see the management commentary in this particular quarter.
Deven, railway stocks have been seeing traction, and even more so now as we run into election soon. Is railway stocks election play for you? And if yes, give me 1 or 2 stocks that you would still buy at these levels.
Yeah, sure. I think the conviction is there with likes of ABB, Siemens, kind of companies, and many of the ancillary companies we are otherwise also there but not listed. Some of the companies are in EMS segments who are catering to the railways, likes of DCX system, which entered into the market recently, last 1.5 years or so. I guess I think this kind of companies are showing larger amount of growth traction because of the railways putting in significantly large amount of orders in their hand. We believe that this particular journey is a beginning for railways. In fact, I think railway movement is similar to what Maruti movement was in 1980s. I guess I think this is the kind of situation which is happening for next 10 years in railways. The newer trains are coming, the tracks are being laid down, the further amount of growth is seen both passenger in the cargo with the special cargo corridors are coming up. I guess I think the railways are looking relatively, I think, more stronger than ever before. And one will probably look at, I think, more opportunities if the values are available. I think at a relatively, I think, bargain price. ABB, Siemens, they remain good, but I think they're fully factoring the price at this point of time. Maybe some correction in the price or the time correction would probably allow you to buy further into discounters.
Just a quick word on what's happening with Voltas. Voltas is completely on fire this morning, and we'll just pull up where it is right now, 10% up right now. Fundamentally, of course, scorching summer, etc. They mentioned it as well. But Sudeep, on the charts, do you like Voltas? What would you do with it right now?
Yes. So while we discussed in the morning that stock is looking good for more than 1350 plus. Now it's almost there on the screen now, 1355. So I feel the trend is still stronger. If someone is holding this stock, then can continue to hold this with a 1300 as a trailing stop loss 1280. And I feel here one should not look at from a short-term perspective, because given the kind of comments that are incoming because of the onset of the summer season, I guess this is just the beginning. And I feel post a small consolidation in Voltas, because the move in the last few days has been too sharp, the trend is still stronger. And I guess from a medium-term perspective, if you see at the weekly and the monthly charts time frame, this stock could continue moving up to 1500, 1550 levels also. So a small dip could be used to go long, and if someone is holding it, can keep trailing this with a 1300 stop loss on the downside.
All right, Devin, you spoke briefly about Voltas, but do you think this is more about the scorching summer heat play? And then which are the others in this bracket that you would look at? Or is this a Voltas story?
No, certainly not Voltas story. I think the likes, along with Voltas, I think likes of Blue Star, Havels in particular, they are showing relatively good amount of order inflows. And at the same time, I think the better position as far as I think the semi-related sale is concerned. So I guess I think these companies are having a good amount of business to talk about in next 3-4 months. In fact, I think this quarter, April to June quarter, for most of the companies, if my understanding is correct, would be the record quarter that one has experienced till now. So let's wait and see. I guess I think the momentum continues in this counter, and one will make money. That is very, very obviously clear at this point of time. Plus, election-related spending is happening. So that is also adding further into the thrust and the marriage season in the most part of the country. So as a result of which, I guess I think particularly the rural areas, which is basically bringing up the sales at this point of time.
Sudeep, as the small and mid-cap stocks are headed into a pre-election rally, I don't want to ask you about intraday or this week's trades, but 6 to 8 weeks out, are there any stocks that are looking good structurally that could participate and lead from the front in this pre-election rally?
See, from the mid-cap perspective, I feel stocks, a lot of stocks have already run up too much. So I would give small cap stocks a skip right now, because there I'm not finding any attractive risk reward ratio. But specifically from the mid cap end of the market, if you see a lot of these stocks, even from the FNO as well as from the non-FNO names such as Indus Towers, or if you see a stock like Muthoot, or a lot of these Info, or from the cash side, Blue Star, all these names are looking good, and wherever there is a good story behind this, the stocks are moving. And even from the mid-cap space, there are a lot of stocks that are month-on-month hitting lower lows, and the momentum there is declining. So we need to be very stock-specific even within this space of mid-cap as well as small caps.
Okay, well, just the crazy moves that we're seeing in some of the stocks this morning. By the way, it's not just Voltas alone. Symphony too is up another 4.5%. So it's pretty strong showing for almost everything related to this cooling solution space. So do keep a keen eye out there. Some very strong moves happening in that bucket. And Sudeep was right, Indus Tower has done very well too. So that stock too is shining in the session today, up about 4%. Pretty strong showing by that one as well. Adani Green, by the way, up 3%. So contrasting fortunes for Adani Green and Adani Ports today. Adani Wilmar is the other one, which is up about 2%. Even before we thank you, something that you're keenly watching out for this earnings season, from an earnings perspective.
I think on chemical portfolios, I think we are looking at whether the cost structure is stabilized and the order inflows, I think, which they have already been having. Are they giving some further amount of guidance for upping the order inflows, particularly the companies which are into the API space, companies which are into the CRAM space? I believe that I think this could be, I think, an indicative quarter for the financial year 24-25, wherein many of these companies are expected to show relatively better performance than what they have seen in the last 2 or 2.5 financial years. So that is one space we are clearly looking at. The second space where we probably, I think, like to look at very carefully is the automobile ancillary space. They have been on a muted side. They have been experiencing the growth, but they have had the problem of high cost inventory, at the same time some pressure on the margin, which to me I think is going away this quarter onwards. So hopefully I think we should be seeing some better direction coming from them. And last but not the least, I think the engineering R&D space in the IT, where we believe that some of the niche play is happening around in the engineering space, where the order book position becomes very strong and maybe 20% plus kind of a growth is being expected from some of these companies like LTTS, Science Technologies, among others. So we look forward to the guidance coming up from the management on this company in this quarter result.
All right. Thank you so much, Sudeep and Devin, for speaking with us today. Time for a very short break. But on the other side, we speak with the management of L&T. Stay tuned.
Back with India Market Open right here on NDTV Profit. We're talking about businesses on the global side engaged in oil and gas, infrastructure activity, bagging a lot of, for lack of a better word, orders across the landscape, India and globally. Now, L&T, the hydrocarbon business, just look at what's happening in the Middle Eastern side, wherein 45% of the total order inflows are from that geography. The pipelines are looking strong, and apparently the execution is happening in a timely fashion, which leads to some optimism out there. Let's get in Mr. Subramanian Sarna. He's the whole-time director and senior executive vice president of energy at Larsen & Toubro. He joins us right now on the show. Mr. Sarma, good having you. Thanks for taking the time out. Good morning. People seem to believe this whole energy, natural resources space is on an upswing. Exploration activities on an upswing, and everything related to infra around that pocket is perking up. Can you give us a sense of how do you see that piece of the business relative to what the last 10, 15 years have been like?
Yeah, thank you, Niraj. Thank you for having me on your...
Pleasure is ours, sir.
Yeah. So I think I've been saying this for quite some time now. I mean, I have not been in the industry for almost 4 decades now, and what I'm seeing now is it's a very different situation in terms of, I mean, it's kind of actually in a sweet spot because with the energy transition happening, most of the oil producing companies are following a multi-pronged approach. They are on one hand continuing to sort of develop their conventional fields to generate the source of revenue, and at the same time they're also looking at how to transition from high carbon to low carbon, using more and more, developing more gas fields, and also at the same time they're also looking at how to get into the green space through green hydrogen, blue ammonia, etc. So I think there's quite a bit of activity happening all around, particularly in the Middle East. And I think with the oil prices where they are due to the supply-demand issues as well as geopolitical issues, there is a good sort of capital getting allocated to this area now. So we're quite happy with the way the things are panning out.
Mr. Sarma, so I'm sure it's great to be happy currently, but because you would look at cycles by virtue of your experience in this field for so many years, would you believe this cycle will last up to a particular point of time? And what's the best guess that you have? I mean, could it last for the next 2-3 years? Could it last for longer?
See, I think it all depends on how quickly this energy transition happens, and how quickly the newer sources of energy gets adapted into the daily lives of the people. And that will depend a lot on the cost of the new sources of energy, which currently is quite high. So some technological breakthroughs have to happen. And if that happens, then there can be an acceleration in adaptation, in which case the cycle might slow down in terms of conventional fuels. But then it will bring up more capital in the green space. So I would say that next 2 years the momentum should continue, and also there will be a lot of petrochemical type of projects coming up, which will pick up maybe 2 years later. So all in all, I think I have a sense that we are going to see a reasonable set of opportunities for the at least next 2 to 3 years.
Mr. Sarma, just to get a sense of what the mix is looking like going ahead over the next few quarters, and very good morning, this is Tamanna here.
Hey, Tamanna.
We have seen the international flows to be robust, specifically from Middle East, Saudi Arabia, etc. Not so much for domestic inflows. Do you expect that to pick up post-elections once the capex cycle or government capex cycle picks up? Can you just give us a sense of where you see it settling between both sides?
Actually, Tamanna, in the domestic market, particularly in the oil and gas sectors and the refinery sector, we have not seen much slowdown because of elections. I think traditionally, that sector continues regardless of the political situations. But it's just a normal cycle, because last 2 years there have been multiple projects launched. 3 years back, like we had Barmers, and then we have Panipat by IOCL, and so on and so forth. So I think those projects are under implementation. And I think now they have identified a new set of projects, some in South, as well as again in Orissa. So the refinery have to be expanded with the way the strong economic growth what we have in our country. We will need more refining capacity, and also we will also need more petrochemical capacity, because our per capita consumption of petrochemical in India is relatively very low compared to the global standard. So both of this will require that we'll have more and more capital allocated to refineries and petrochemicals, and that cycle will continue. I think it's just a natural, normal cycle. I would say that after a few projects are launched, then you see a little bit of a slowdown and the momentum will pick up again. Same with ONGC. I think they are definitely extremely keen to continue to develop their reserves, and they are the main producer of oil and gas in India. So there's a huge impetus to continue to develop those fields, and those projects also will get launched. So I think domestic, I'm also quite optimistic that the capital allocation will continue.
Of course, sir, and I get your point that these are long cycles, and that's why perhaps we've seen this sort of a slower cycle in the recent past. So when do you expect the domestic side of things to pick up again? What is the timeline of some of these projects you're talking about?
I think 2025, we should see many of these projects getting launched. I mean, it's already, we are seeing tenders being released, and the award should happen in first half of 2025.
Sarma, hi, it's also Samina joining in, and I want to talk about something more recent. You bagged a pretty significant order, again, from the Middle East, I believe, to the tune of 5,000 or 10,000 crores. This is the largest one so far. Help me understand the execution of this order, payouts, and when does this become revenue accretive? Is it milestone-based payments? Because orders aside, execution and profitable execution is really what you'd be wanting to focus on, right?
Yeah, absolutely, Samina. I think execution will remain our focus. I mean, I have always been saying that our growth will be more limited by our ability to execute rather than the number of opportunities that will be available to us. So our focus has always been in execution. I mean, across our various businesses. This project you're talking about, the recent one we announced, is not the largest, but it is largest in terms of a pipeline category. And you know what, we have over the last 5-6 years strengthened our execution platform in the Middle East. We have very senior resources based out of Middle East, and added a lot of capability, and we are also using a lot of local resources. So I think the whole ecosystem has been developed gradually over a period of time, and also we have a lot of learnings from what we have done in the past. So all put together, I think we are confident that we should be able to meet our customers' expectations. So far, so good. And then I think that is the only reason we are being considered for some of these large opportunities, because if you don't perform well, then we will be denied those opportunities. So I think execution will remain a major focus, and we are constantly working towards that.
There have been no delays in that sense on execution, right, Mr. Sarma? Have you been able to deliver on time and receive those payments?
Yeah, I mean, these projects are still in the execution phase, and they are all well within the normal norms and tracking the normal progress. And yeah, there are no issues at all with the payment and invoicing. All going okay.
Very quickly, I mean, you're clocking in at about 1 lakh crores in terms of order book. Going into the next year, FY25, what is the sort of growth you'd be happy with, or your board would be happy with? And also, quick word on margins, because I know competition is intensifying, raw material prices are going up, and if you've got to focus on revenue, it may come at the cost of low margins. And the margin range as well, that would be comfortable for you for the next financial year, or the next 1-2 years.
Yeah, like you said, the order book is very strong, and which gives us almost 2.5 years of runway. So we are not in a great hurry to book more orders. And like you pointed out earlier, the focus will be on good execution and delivering the projects on time and trying to protect the margin and keep our customers happy. That is where we are focusing on. But along the way, we will also find new opportunities to backfill. And so the growth rate will be very much similar to what L&T Group has been generally indicating, 10 to 12%. And if something better happens, it's good. But I think we'll be very selective because our focus will be to see how we can protect or improve the bottom line.
Thank you very much, Mr. Sharma. Great talking to you. It's looking good for L&T Hydrocarbon with a 1 lakh crore order book, a recent order win to the tune of 10,000 crores in terms of value. Management very clearly stating that it's going to be profitable execution, and that's what's important for the company, not just bagging big orders. We'll take a break. We'll come back. We'll put the focus and talk to the manager of ESAF, Small Finance Bank, post which also the manager of Bandhan Bank will be joining in, so stay tuned.
All right, welcome back. By the way, in case you hadn't noticed, Nifty hit an all-time record. Markets doing decently. It's gone off those levels, but yes, it's been a good morning for the markets. Financials, oil and gas are some of the spaces which are leading that up move, and we are talking now to ESAF Small Finance Banks. Now, the story as far as the financials are concerned has been a very robust deposit growth in this quarter, and that's the story with ESAF as well. To speak more on what exactly has happened this quarter in terms of their business updates, K. Paul Thomas is joining us now. He's MD and CEO at ESAF Small Finance Bank. Mr. Thomas, great to speak with you. Let's start with the story about your deposits. Year on year up about 35.5%. Quarter on quarter, I see about 5.5%. What has shored up these numbers?
Yeah, thank you. Yes, we had a very focused approach for mobilizing deposits because we realized that liability is going to be very competitive. So we focused. We had various campaigns. And our NRI contribution really helped us to around 20% of the deposits are from NRI. So our NRI, we launched the NRI in 2018, and so we were year-on-year basis, we were building up our NRI deposit base and very stable. And then the CASA also, we were able to maintain the CASA growth and improve on it. 22%, 22.6%. The TAS segment and the micro segment also really helped us to grow the book and the term deposit overall. So we don't have, mostly 92% of our deposits are from the retail category. So there is not much dependency also on bulk. So it is a great story on building the deposit base, and the number of branches also really helped us. We have 53 more branches during the year. That also helped.
So 53 branches through the financial year.
Yeah, this financial year.
Now, while you're right, that is a great story, Mr. Thomas. What is perhaps, I would say, not such a great story is what we're seeing in terms of the asset quality. Now, I know 70% of your loans are micro loans, and we've seen the GNPA slip to 5.3% from 4.2%. What do you think has contributed to that?
Yeah, the last three quarters we have been facing that challenge. Mainly, it's mainly concentrated on the coastal block. We have a very little concentration also on the book, micro banking book, entire West Coast. From last July onwards, there was slippages happening because there was there's stress in the income in that category, fisherman category, and also with the floods in Tamil Nadu. Also, those belt actually contributed mainly to that. But now the slippages, the percentages come down, and we are hopeful that we will be able to bring it down in the next 2-3 quarters. We will be able to back the normal level. So it's in control, and these are all first cut numbers, and we will be able to talk to you once the financials are finalized, so that with the clear numbers we'll be able to talk to you.
Sure. Mr. Thomas, good morning. Niraj here.
Good morning, Niraj. Good morning.
Just wondering, so over the next 24 months, or rather 12 months, let's stick to 12 months, would the focus be on improving the asset quality even if it comes at the cost of growth? Or would you want to grow because of the base that you have, even if the asset quality or the GNPAs stay at slightly elevated levels?
Yeah, we are focusing, and we have already bringing that focus on improving the asset quality. Is already in place. But as you rightly said, the base is still low. The growth will also will happen parallelly, because we are now growing in the new sectors. The micro banking portfolios come down to 68%. So now year-on-year basis, we are bringing down the unsecured book. Now, last year we have grown gold loan has grown around 43%. So now gold loan constitute around 15% of the asset. Agri finance has grown around 47%. Agri also constitute around 6% of the portfolio. So all these retail assets, mortgage, mobility, all these products verticals we have started recently, and still these verticals definitely will grow. We are having major problem in the asset quality issues are with the micro loan, and there we will have a controlled approach with focus on improving the asset quality.
Okay. I understand that, sir, but I'm still looking for clarity here. So I know you would want to do both. I'm just trying to understand what will the focus be more on. Would you sacrifice growth in order to bring down the GNPAs? Or would you believe that growth is paramount? So even if GNPAs, maybe they don't stay at 5%, they come down a little, but even if they stay elevated at 4%, you would be happy with that. Just trying to understand what will get the larger weightage.
See, if you ask me, it will be almost a 50-50 focus, 50-50 focus, because we cannot just ignore growth. So if you look at in the past also, we've managed NPAs and also we have grown in the past. So that we are confident of managing that both simultaneously. That will happen.
In terms of, managing those NPAs, Mr. Thomas, can you just give us a little more detail on what that strategy is? Because like you explained, a lot of this was because of floods in Tamil Nadu and, issues that fishermen, etc., focused and faced. Are you changing the focus, or are you shifting the focus of the customer base, or how would you manage these NPAs?
Yeah, the customer base, we see the growth of a geographical presence in the last 1 year. If you see, we have opened 90% of the branches we have opened outside Kerala. So the new branches, and so our focus will be on these states like UP, Bihar, Madhya Pradesh, where we have been there for many years, Maharashtra. So these are the states now growing, but at the same time, we have created a separate exclusive collection team to manage these NPA accounts. So exclusively, they are focusing as a big team of collection officers have been created. So they will be. So we'll manage that both.
Got it. So you're expanding geographically as well. Thank you so much, Mr. Thomas, for speaking with us today and answering all of our questions. We hope to speak with you once again soon. That was the MD and CEO of ESAF Small Finance Bank. Meanwhile, quick look at what's happening with the markets before we take a very short break. And I just want to pull up two stocks, Wipro and Bandhan Bank. Both of them have seen announcements of their CEOs departing. Wipro down about 1%, but Bandhan Bank is the one that has really suffered, recovered from its lowest dips soon after opening, but still about 6% down. With that, it's a wrap on India Markets Open, but stay tuned. Talking Point up next.
Well, thanks for tuning in to NDTV Profit for this show, and just mark the markets for a brief moment, because we seem to be doing okay, about 1/3% for the Nifty, so there is no big change there. So the markets seem to be steady for a better part of the morning. Specific pockets, though, are the ones which are taking center stage today. So we know that the cooling solution stocks have done well, the likes of Voltas, Symphony. I don't know if Hitachi Energy falls within that space, but I think that whole bucket of stocks has had an excellent start to the trading day today, courtesy the numbers from Voltas and the brokerage upgrades that have come in. Info Edge has given a sparkling update, and as a result of which that stock, plus the brokerage upgrade, Cities double upgraded Info Edge, Nomura is constructive. So that stock is up about 7% in trade. There's also the oil and gas space in focus, especially after Morgan Stanley's note on Gas Authority of India. This is the second brokerage to turn very constructive on Gail. It's not as high as some of the others, but it's still very constructive is Gail. 194 and counting on that one. So watch out for some of these, could be doing well. By the way, just speaking of cooling solutions, there is a resultant impact on Amber Enterprises too, which is up about 3% in trade. And courtesy Vodafone Idea's fundraise, Indus Towers too is up about 3%. So some of those stocks are doing well for themselves. Thanks for tuning into Talking Point. I'm your host, Niraj Shah, and and actually, let me start with the case for a chat today before I introduce our guest on the show. The case for a chat, and you can argue that one of the things would be around whether financialization of savings will impact deposit growth constructively. Are we seeing signs of that already in the Q4 numbers thus far, because of which banks are taking center stage in holding the markets higher? We also need to focus a little bit on consumption since some of those things have started trickling in, and whether discretionary spends will aid consumer services going ahead. Lastly, are healthcare valuations pricing in some good delivery from the healthcare space, or will we see some uptick out there? Well, I think on all of these points, the portfolios of Helios, AMC seem to be perfectly placed, and therefore we get in Dinshaw Irani, or we talk about these points to Dinshaw Irani of Helios Capital Management, joins us right now on the show. Dinshaw, great having you. Thanks for taking the time out. I would have wished for the Bombay traffic to be better, for us to be sitting across face to face, but nevertheless, it's great having you.
Thank you, Niraj. Thank you for having me on the show. And sorry, I would have loved to come across to your studio, but there was a mess-up. So
Completely agree. But Dinshaw, it seems like the market is not seeing too many mishaps. Almost every wall of worry is being climbed. And while I've seen enough people talk about the issues, you guys have been out there saying that you are constructive, you continue to remain constructive, and it's paying off thus far.
Yeah, Niraj, actually, so look at the medium and long term. I mean, obviously, nothing can be parallel to what's going to happen to India. And probably you can draw a parallel from what happened in China in the early 2000s till the 1819s as such, 2018-19. I think that's what India is going to go through. Right? But because, I mean, why? Because we are looking at the economy growing. We're probably going to be adding probably a fifth or a fourth to the delta of GDP growth every year in the next 5 years as such. So obviously it's going to be an exciting time going forward. And we're going to be the third largest economy and stuff like that. Yeah. But in the immediate short term, we are a bit more cautious than what we were earlier, though we remain constructive on the market. But in the immediate short term, I think there are quite a few bumps along the way which we need to overtake before we get totally bullish. So I'll leave it here.
Yeah, but so I'm wondering, Dinshaw, what is the mental model while putting in money to work? Because you can argue that, yes, on the valuation argument, people are not wrong. It is, to an extent, expensive now. So therefore, do you look at past instances of other economies to tell yourself that, Baba, earnings growth will make up for this?
So Niraj, it's not only valuations. Valuations can remain stretched for a very long time, but they need some negative triggers to correct, right? And I believe, I mean, that's what we believe is that starting from the March quarter, the numbers may not be that exciting. I mean, our feel is, though you saw what Voltas gave out and it's put the whole AC market on fire as such, but our feel is that's more of a push towards the inventories being held by the distribution chain rather than actual offtakes happening, because North wasn't that exciting in terms of AC. But anyway, putting that aside, the fact is that there'll be pockets of disappointment in this quarter. And obviously that will be one trigger that probably the market may not like as such, given that the last 6 quarters prior to the March quarter, one has seen only upgrades happening in the earnings of the Nifty and various companies. Our feel is this time around the disappointment to surprise ratio will be more of even Steven rather than in favor of surprises. So that may be a dampener. Then comes the elections right around the corner now. Obviously, a lot of rumors will fly around that time, so markets will be fairly volatile and choppy. And then comes your budget. Again, the budget will be quite a few rumors flying around already about the budget, and obviously there are good things and bad